I think from looking at the Dutch market relative to the German market, where we've been an investor for 7 years, it offers a number of the same things that originally drew investors to the German market. The general undersupply of housing relative to a growing demand. Indeed, the Dutch market overall has a growing population as well as growing household generation, and that really drives the demand for residential housing. Also, I think what's changed over the last year or so is there's an increasing supply of assets driven by some of the legislation regarding the housing associations, which will encourage them to sell some of their free rented housing. As well, what we've seen is a clear regulatory environment, which allows us to understand as international investors what the dynamics are behind raising rents, what the dynamics are behind the regulated environment. We invest in both social and free rented housing. And I think all of these things, and really driven by that liquidity in the market, has allowed us to enter, and I think our own peers internationally, to draw more interest in the Dutch market to what was historically, I would say, a more domestic investment market.
We are obviously very interested in the Dutch market, as we are in most European residential markets today. I must say it's driven mainly after the outbreak of the crisis. You see a different risk tolerance with most investors, with most institutional investors. And you see that the emphasis is very much again on stable income and stable returns. And housing as a basic need, with indeed an undersupply, with a very granular tenant base, provides for that for us. And Holland specifically is lagging behind for the obvious reason of high ownership occupancy ratios and a very small rental market, especially a very small private rental market today. So we see that the macroeconomic fundamentals are changing. The deregulation is going on, so this is a very good time to step in at the moment. Yeah.